said this since the beginning.
Hey, everybody. My TV just went on, so I just wanted to turn it off, the sound. How's everybody doing? Daniel in the house, my identical twin friend. Nice to see you, sir. It's a good day for the home portfolio today, as you can probably imagine, since my two biggest positions outside of MX were ZenDesk and AXSM. I'm making less money today than I should be making, and we'll discuss why that is. But a green day is a green day, so it's been a tough few weeks since April 1st. Basically, since April 1st, Magnachip's gone from 1775 to yesterday 1480, and since it's like an 80% position, delta adjusted, it's like 65 common, like 15% options. That will decimate your portfolio, and it did. And we're going to spend most of our time talking about ZenDesk and AXSM. It's funny, I was going to do a YouTube today after the ZenDesk news yesterday, and I was going to caution everybody on AXSM that I've made it a much smaller position. I guess it's a good thing the news came this morning, because now anybody that wants to shrink it can shrink it at a much better price than they could have shrunk it yesterday. So why don't we start with AXSM? The reason why I shrunk it was twofold. One, when it was in the mid 40s, it's a very different proposition than when it was in the mid 20s. And I was concerned that we were 3 full weeks post curing the deficiencies, and we still hadn't gotten an 8K saying that they entered labeling. It didn't make any sense to me why the FDA would take a big gap between curing the deficiencies and labeling. So I was very nervous about a CRL coming, even though, again, all signs point to approval here. So I had a sizable April put position that wasn't very expensive to put on, and I cut a lot of my call spreads. And today, what I came into today was I have about 175 basis points, 150 basis points exposure in call spreads all June. And I own May puts, and I'm short June puts. And I have no net exposure in the puts. It's just calendar spreads, which hasn't worked for me so far. It keeps getting pushed out, and I keep losing money on the calendar spreads. Today's 8K was very interesting because it wasn't labeling. Today's 8K was that they have agreed with the FDA on post-marketing studies. And they also said that the FDA expects to issue its decision in Q2. It's very good news. It's extremely likely that this is approved. Why the FDA would negotiate with them post-marketing studies if you're going to reject the drug and require new studies, potentially, unless it's a manufacturing problem and there was nothing wrong with the manufacturing in their inspection. I mean, it all but means the drug is going to be approved. And that's why you're seeing it up 20% today. Now, some pushback I got from somebody on Twitter was people are worried about there being REMS with the approval, which would significantly limit the commercial opportunity. And I'm told from others that are very close to the situation that the odds of a REMS is very low, that Robitussin is available over the counter and it can be abused as much as it wants to be. And there should be no reason why this mixed Robitussin and Wellbutrin mixed together should require REMS. It remains to be seen. So I've done nothing with the position. My call spreads are 40-55 and 40-60. That's what I have left in June. If May comes and goes without a CRL or approval, I will cover the June puts I have. It cost me some money. And I will just wait it out to see what happens with the approval. Hopefully it clears 55 or 60. It might not. That's the really hard part with this right now, is how much does it go up? But it feels very de-risked to me now. And you know, this one went exactly the opposite of the way all the pros told you it would go, right? Got a famous deficiency letter in July. Nothing's ever been approved when it's gotten one of those letters. They then, you know, I've analyzed the situation many times on here, and every path led me to approval, starting with the October deficiency letter that said it did not preclude labeling discussions. But again, then why didn't they label in January, February, and March? They could have labeled while they were working on the deficiencies, and they didn't. So there were enough red flags in the last 3 weeks for me to be concerned because I was so big in it. I made money in it. When I took it off in the mid 40s, I had big profits on the call spreads and the calls. And, you know, it is what it is. It won't be the gigantic home run that it could have been, but I made money on it. And I should make much more money on it if it gets approved and it holds 55 or 60. The call spreads are still paying, you know, 3 to 1 or whatever, or better. So that's the best way to set it up, I think. If I was going to put on something today, it would probably be like 40, 50 or 45, 55. I wouldn't go past 55. So that's AXSM. If anyone has any questions, please feel free. Fascinating situation. Zendesk. So Zendesk is bittersweet. I had been absolutely huge in that through April OpEx. I think I mentioned on here last time that I had a ton of April 125s and 130s. And when that expired on Thursday, because of Good Friday, I exercised a quarter of them. And to show you how big I was, maybe I exercised a third of them. By exercising a third of the 125s, it turned it into a 25% common position. And in addition to that, I had another 40% in delta adjusted May, July, and October call spreads. So going into Monday, today, this is Tuesday, going into yesterday and throughout yesterday, I had a 65% position in Zendesk, delta adjusted, and it hurt pretty bad when it was down during the day. I didn't do anything with it yesterday. We then got the long-awaited article that I've been waiting for. That's why I said long-awaited. And the article was more disappointing than positive for me. And I'll tell you why. So the only positive I saw in that article is you now know that the board is open to a sale. Or you think you know. They could be lying. They could be doing this to put on a show for Jana so that when proxy season comes around, they don't get their seats voted off because they can say they ran a process. I don't think that's the case, but they could be doing that, okay? The thing is, I thought since the March 1st article, that was the last time we heard anything about Zendesk, that the consortium was coming back with a refresh bid, that they wouldn't have done that if the board was not receptive. So I always thought the board was engaged in the sale process at that point. Further, there had been no record date for 6 weeks now for the annual meeting, and they've completely ghosted everybody. They don't respond to investor relations emails, and I could come up with no other scenario than they were deep in a sales process. And then the other bullish thing, as you know, is the Anaplan deal in mid-March, where the equivalent valuation for Zendesk can get you like $200 a share. I got to turn off the heat. I think my Nest is completely broken. It just goes on. It drives me crazy. So I will turn it off. So the Anaplan deal was super bullish. You had direct lending, and the direct lending told you that there's credit markets open. Then we got to April 1st, and I couldn't be more bullish because by April 1st, ARC was 70 which was higher than it was back in March 1st. And you hadn't had a record date. And there would really be no reason why they couldn't get the deal done. And then, of course, April happens and the market falls apart. But Zendesk holds in. Zendesk kept its own the entire month up until even 2 days ago. And it definitely made me nervous. But again, I didn't shrink the position. I had a 65% position until today. So what does this article say? The articles say, there's two of them, one from Reuters and one from Bloomberg, that they recently hired Catalyst, which is, for those of you who don't know, is Frank Quattrone's boutique investment banking firm. They're the axe when it comes to technology deals. And it said it hired them to solicit bidders, both strategic and financial. And it said nothing about the private equity consortium. It said nothing about any actual bids. And it said nothing about a timetable. And the concern I have is if it's been 7 weeks since the March 1st getting financing refreshed bid article, why the leak now to tell us they hired this new bank and they're reaching out for bids from private equity and strategic? Wouldn't that have happened a month ago? The only explanation I have is, well, I have two explanations. I think one's much more plausible than the other, but I don't know which one's more plausible or which one is the truth. The two explanations are as follows. They've got very deep with the private equity consortium. Due to the market turbulence, one or more of the groups fell out, dropped out at the 11th hour, and this is plan B. Plan B is hire this bank and run a full process to get this thing sold. Before, maybe they would have done a go shop after they agreed to whatever price the private equity consortium was going to pay. Not so overly parsed words, but they didn't say Quattrone was recent. That's true, Glenn. It said they added, and if they added Quattrone, they didn't add him 6 weeks ago. The article altogether read to me like it was new. It's a new push for bids. After reading hundreds of these kind of articles, there were many things that were absent, and they didn't have to be absent. There was no talk whatsoever about the private equity consortium. We know that they're there or were there. So why was that not leaked? Bloomberg's the one that leaked them in the past on March 1st. They clearly have the same contacts today. This leak was all pushed by the company. It was all about the company's process. There was no sources from the buy side, aka private equity firms, because they weren't mentioned in there. The second possibly bullish reason why Quattrone was hired is maybe they got far along in the process with the private equity firm and the strategic came in. And the board said, okay, if we now have multiple people interested in this, we don't want our current banker. We want somebody more seasoned to do this. Again, seems odd. So let's bring in Quattrone. Let's run a full process, and we'll get this wrapped up in 6, 8, 10 weeks, whatever. I still think it's very likely this is sold. Okay, very likely. It works good for strategic, and it works good for financial, and it's a good asset. What I don't want, or what I didn't want, is exposure into earnings or equity exposure or at the money option exposure for May into earnings. I never wanted that. And I don't want to have to bet on a deal or article in the next 30 days to get paid for May. So yesterday after the close, Daniel, I sold that whole 25% common position at like 131. And today I sold all of my May call spreads, which were 125, 135s, and 130, 145s. And what that left me with is a 20% delta adjusted position all July and October, which is a very sizable position, guys. I'm a cowboy and I had these huge positions, but most people don't put on 20% delta adjusted positions in options, you know, let alone 20% common positions. So some context there. So still very bullish on Zendesk. Not positioned in the extreme size I was yesterday or the week before. If I was going to play May, which I'm not going to, I would probably, sell like 115 May puts to buy a 140, 150 May call spread. Because I don't think it's going to go below 120 on earnings unless they're just really a disaster, because you have this bid and this process that's out there, and the process isn't going to die in the next 30 days. I think right now, Jason, the best way to own this is a July call spread, something like a 135, 150. I think this goes for more than 150. And it could go for like 170 or 175 or 180 if Strategic buys it. So if I was putting it on fresh today, it would be 135, 150s July. You have plenty of time to capture the whole process. You're only going to have to see one earnings, the one in May. And I guess in your worst case outcome, it sells for the low 140s. I think it'll go for much more than that. And if that happens, you'll still make money. You might even double your call spread, or make 50% your call spread. Though, depending on how long it takes to close and all that stuff. I can't see it going for low 140s anymore, even with what the market's done. I just think it's too cheap. So yeah, a little bittersweet, especially since I had all these April calls and they expired Thursday, and they'd be worth $5 right now or more with any time value money. And I got 30 cents for most of them on Thursday. But 'tis the nature of this game. Let's talk Magnachip a little bit. So Magnachip remains by far my biggest position. Like I said, I would add more if I could, mostly in call spreads, but Interactive Brokers is charging me too much margin to add. The options I like in Magnachip, if you have a broker that doesn't charge you like 300% margin on it, which mine does, it would be January 1750 or 20 calls outright. I would probably just buy the 20 calls. I've been buying the 20-25 call spreads for like 80 cents or 75 cents. And more recently, I've been buying Jan 24, 25, 35 spreads. Again, I probably would just own the 25 call if your margin can handle it. The beauty of those Jan 24s is that I'm paying like $1.10 for them. And if it gets sold anytime between now and next year, it'll close by Jan 24, almost certainly. Because if they do a process in 23, it'll probably be in the summer or spring of 23. If they do it this year, I don't see it selling for less than $29. And I see it closing. So your $1.10 will be worth $4, and you'll make a great return on it. The way I look at it, though, is that I own them so that if there isn't a deal, we get to see all of January, all of 2023 earnings, which could be as much as $2 a share in earnings, and looking out to the next year, $2.50 or $3 or whatever, who the hell knows what this thing can do. And you should have a magnet chip that's way higher. So if I'm paying $1.10 to make 10, I'm getting, 9 times my money. 9 times my money, and the stock has to a little more than double. And I have 20 months for it to do it. Excellent setup. So obviously, equity is my biggest position. I still own all the June spreads and the September spreads. They're pretty much worthless, though. But if a deal happens, I'll get paid on them. But they're pretty much worthless. Most of the dollar exposures in the Jan 2025 line and some Jan 2230 line. And then I now have exposure, like 100 basis points exposure in Jan 24, 2535s. So what's going on with magnet chip? Obviously, the big issue now is COVID in China. When I met with the CEO in mid-March, he told me COVID in South Korea would not be a problem. The factories would not shut down. And I assume they haven't. But he did say they had a component in China that if one of those factories shut down, that could fuck up their whole supply chain. But he kind of dismissed it, probably thinking there's no way it would ever happen. And then sure enough, all these cities are shutting down in China and are still shut down. So that's on the supply side. And I have no idea. I haven't emailed the company. Nobody's told me that they're in trouble. I have no idea if it's going to be affected. On the demand side, half their business comes from the greater China area. Now, again, they have so much more demand than supply. I have no idea how Shanghai, for instance, being locked down could affect them for the end of Q1 and then for Q2. I would think it does, right? But I have no idea. The good news is that Q1 and Q2 are truly not the story with magnet chip, right? The story is when the supply comes online, starting in the second half of this year, probably starting in the summer. They're very coy about when it is. You will then see a consistent ramp in revenue and earnings throughout Q3, Q4, and 2023. And a hiccup in revenue in Q1 or Q2 does nothing to change that thesis. Now, does the stock go down? I mean, I don't know. I obviously don't care. I'm buying it every day when I can. And like I said, it's a 65% position. It might even be. It's a 70% common. And then another, 15% delta adjusted. I go back to the meeting with the management team, and he told me in no uncertain words that they might be restricted from doing another ASR then. And you could say, well, it was middle of March. Maybe he was just restricted because earnings, it's a blackout for earnings. But contraire. They announced the ASR in the middle of December last time. And that was 2 weeks before the end of the year. So who knows when the ASR and how it works and when they can start executing stock. But they definitely can sign a contract 2 weeks before the end of the quarter. And they did not here. Further, we know from that January article, which could be bullshit, in the Korean press, that JP Morgan was going to start reaching out to buyers after they reported their February earnings. Now, the street thinks there's no process at all because you had an insider sale and an insider buy in the middle of February. The CEO's response to that was, we have windows, and that was a window. And who says we are not blacked out now? Look, only time will tell here. If they report earnings and you see more insider trades, they're clearly not in a process. Those insider trades were not big. One guy sold like 15,000 shares, which is like 15% or 10% or 5% of his holdings. And then the CEO bought 4,000 shares, which wasn't even 1% of his holdings. So the CEO put 100 grand into it, and the other guy sold like 300 grand worth of stock. And there was no thing to read out of the sale. He sold a fraction of a percent of, like I said, 2 or 3% of his holdings. What's interesting is that the Magnachip CEO is all in on this stock. He owns a ton of stock, and he has 200,000 options expiring next May at $15 a share. So if anything, he's a seller, not a buyer, right? He has all the upside he needs in just those options alone, on top of the many hundreds of thousands of shares he owns and other deep in the money options. So I think your biggest risk here is that there is no buyer for this company. They can't get a consortium together in Korea that can afford it. They're too worried about splitting it up and selling it to strategic because they might not get approvals. The Taiwanese company probably can't buy it. Maybe they could. We don't think an American one could buy it because that would piss off Korea and the jobs and stuff. So I still place a greater than 50% chance that this is sold by the end of the year. But if it isn't sold, it just doesn't matter, because you're going to get a much higher stock price once the earnings come online. Now, the last piece here, which we talked about in the last video, was that they're going to be spending a significant amount of money on this long-term supply agreement. And I think there might be some confusion about how this works. So they already have a new supply coming on to get to the 600, 650, 700, whatever million revenue range they want to get to in the near term. That's in the bag. It's done. This other supply agreement that they're going to sign is to get to the 1 to 1.5 billion revenue range. And they're going to have to put up money for a take or pay contract. Now, the CEO said that the suppliers want $200 million up front, and he's going to get half of it from his customers. There's so many reasons why this is bullish when it finally gets signed. If the customers are willing to put up $100 million to be part of this long-term take or pay contract, all the pieces of the puzzle are there for the revenue in the coming years. That the supply side is going to be there because they have take or pay contract. And the demand side is going to be there because you have their customers putting up money to guarantee the components. And that $100 million isn't being spent. It'll be capitalized on the balance sheet as prepaid inventory. And they'll pay less cash out as they use it over the course of the years. And as a result, your cash flow will be better to recoup that whole $100 million. So you're not wasting $100 million. It will have the appearance of them having less net cash, of course, on the balance sheet. At this point, I think all the shareholders know that that's the situation. Yes, Sam. So I think they currently have, let's say, 275 million, call it, of net assets minus net liabilities. That's kind of how I look at it. And this will cost them 100 million. So they'll have like 175 million left. And they want to keep 100 million on there for God knows why. So the amount of excess cash they might have will be south of 75 million, which is probably also part of the reason why the stock's gone down. People expected them to do more buybacks. Now, I could be being lied to, but I do strongly believe that the 37.5 million buyback that's remaining will be spent if they're not sold. So you will get that returned. And then they will start gushing cash in the second half of this year. And as that cash comes out, I believe you'll see more aggressive capital returns or a sale, right? Or a sale. We know this company is open to a sale. It's how they will get paid. It's how the management team will get paid, and it's how shareholders will get paid. The only question you have to ask yourself is there value at $29? And can they find a group to pay it? there's undoubtedly value at $29. As I've said a million times on here, $29 today is about $25 in March of 2020. $29 in December, if that's when they signed the deal, let's say later on this year, is probably $23 of value in March 2020. So you don't have to get the old 29 to get 29 now. You need to get somewhere between 23 and 25. And if you're looking out at $2 in earnings in 2023, with some leverage, there's no reason why a company, a private equity firm, wouldn't pay that kind of multiple, especially if they see a long-term business plan to grow to $1 to $1.5 billion in revenues. So I'm going to be nervous on earnings because they definitely could miss and they definitely could guide quarter two down. But, you know, that to me will be like the ultimate buying opportunity if it happens, because you know it's a COVID one-off from China. It's not a result of any kind of true fundamental problem with the business. The risk of an economic meltdown or recession in 2023 or the end of this year, you know, this is a very unique company. They're sitting on demand greater than 50% than they can supply. So, and they have specific products that they have contracted for these chips, whether it's cars coming online in 2023 or a Chinese display maker coming on in 2020, late 2022, handset, excuse me. You know, those things, if they shave a few hundred basis points off or even 500 basis points off of demand, won't matter if you have a 50% cushion for the amount of demand they need. So, you know, I think the market is obviously getting it very wrong. It's not in any indexes. It's SMH has been battered this month due to the China COVID stuff. And I'm going to wake up and get paid on this thing one day. And it's going to be the best P&L day of my life. Actually, the only way I can have a better P&L day is if Bristol Myers settles for like $5 in the CVR. That would be a better P&L day. But this would be close if we got like a $30 takeout or something with all the options I have. And man, if it could happen by June, oh, and it could. It really could. These things come together quickly sometimes, right? We know they're for sale. All you need to do is have the right group, a Korean-based group, offer the right amount of money, and you're done. Everyone's put out of their misery. All right. Any other questions? My hope with Zendesk, and I'll be sad if it's the case, my hope is we get another article and it gives us more detail about the buyers. And if it does turn out there's a bidding war or there's a strategic interested, you'll see it go to 140, 150 probably pretty fast. And yeah, I would have made a big mistake taking the May call spreads off. But look, this is just how I have to manage my risk. These are huge positions. I suffer great volatility. I mean, Magnachip's down over 30% year to date. And the size of the position it is, it's costing me, I think, 25% of my portfolio this year. Yet my portfolio is only down like 3 or 4% year to date because of Blackstone Mineral and AMPY and some of the other trades I've done. Because I've done pretty well in my trades. I just have lost all my money in my biggest position. So the good news is it's marked at 15 now. I still really like KSS. I have not touched that at all. It's about a 250 basis point exposure. I don't know how the board passes on any deal there that has a 7 in it. 7 in front of it. And it seems that they'll be able to get a 7 in front of it. So I think KSS gets done. And the market's basically telling you that too, in the low 60s. And I'm just going to ride that one to the end. It's all July's. Glenn, my AMPY position is only 4% common. 4% common, and then I've had call spreads on for the last many months. I keep rolling them, April's, and now I have July and I have October, and the call spreads all top off at 750. I'll hold that 4% position indefinitely. I have a cost basis of under $1 in it, like 80 cents. So because it's so small, I'll hold it till they sell the company. It's a great hedge for inflation, and I like having the oil and gas exposure on. BSM and AMPY have saved my life this year. Did I talk about this yet? Have I talked about AYX on here? I don't think I did. I do have a new position on. It's not big. AYX is another cloud stock, SaaS stock, and I put on call spreads in November and January when it was lower than it is here. In November, I have 80-95 spreads, and in January, I have 85-100 spreads. This thesis is pretty simple. It's controlled by one guy. He has super voting stock. And if you have super voting stock, you have no need to put in kind of provisions to protect management in the case of a hostile sale, or any kind of sale, I should say. In the middle of March, they granted the management team a gigantic amount of performance units that all vest in change of control. It's very similar to what Zendesk did at the end of February. But even more interesting with AYX, they had no change of control mechanism in place since 3 years ago, when it expired after like 3 years after the IPO, and they put in another change of control mechanism. So now the management team will make tens of millions of dollars if in a change of control, with the performance units vesting completely and with the change of control. And it seems pretty interesting on timing why they would have done that in the middle of March. Now, the founder also sold like 20,000 shares, a very small amount of shares, a few weeks later. So I'm not saying that there's a sale imminent, but it must be on the back of his mind that he's interested in selling the company, because he's the only one that can do it. So they're not worried about a activist coming in. And if you do the math on that, it's a really complicated revenue recognition situation where they changed their contract lengths from like 3 year to 2 year, and it makes revenue understated, but the underlying business, the underlying annual recurring revenue growth is like 30% annually. And but even though the revenues only look like they're going like 8%, that should change this year. There's a whole thread on it in Vic. A couple guys love it. They think if it sells for 10 times ARR, it's worth $120. For me, I just thought I was getting almost 5-1 in those spreads. Now they're less. I had a lot of time in September and November, and January. I can get paid if earnings are good and the stock just revalues to $100 anyway. But I think there's a decent chance you get sold by then. And I put on 125 or 150 basis points in spreads there. So that was a new position. I also bought Roivant, ticker ROIV. I bought that last week, under 4, around here. I paid $3.95. That's a de-SPAC that's just been a disaster. You guys all know what Roivant is if you've been following my YouTubes. They're the guys that fucked us on Immunovant and didn't purchase Immunovant when we thought they were going to. The Roivant thing's pretty simple. It's just a beaten up, forgotten, hated conglomerate of a biotech that has no natural buyers. They have all these different assets that aren't being valued correctly. And I don't know what revalues it or re-rates it, but my margin of safety is very high at 4. And Interactive Brokers is not counting it as a biotech. They're counting it as a normal stock, so I could buy it on margin. And I put on a 4% position in Roivant. And I plan on holding that one for a while unless it gets ahead of itself. But yeah, I think it's pretty interesting. I still own all my SHLX. We're just waiting there, just waiting to wake up for a deal. And my guess is the deal there will be in the high 14s, and we'll get at least one, maybe two dividends. And maybe we get more than high 14s. Hey, but that's what I would guess. 1475, 1480, 15 area on SHLX. On the topic of buyouts, if you look at SRT, non-buyer 540, the merger holder stock, I don't know that at all, Sam. Sorry. I'm guessing that's not marginable. I think that's a small company. And for the most part, I stay away from all non-marginable stocks. Let me look here. Yeah, it's not marginable. I knew the name. Call center maybe, or I don't remember exactly what they do. Any other questions? Comments, concerns, thoughts? All in all, though, my ideas have done pretty well. Even Groupon, when I originally first pitched Groupon on here, it was in the low 20s. And I originally pitched it on my YouTube, on my Twitter in the teens. And of course, it went to 60. So SHLX is a K1. Yeah. And I'm not sure it's worth the hassle. My personal opinion is not worth the hassle at this price. I mean, you'd have to make it pretty big for you to deal with that pain in the ass of the K1. I wouldn't probably deal with it at 14.30. You can follow me on Twitter. My account is given to tweet, but I have to know what your account is. I don't let everybody in. Tell me what your account is, and I'll go check it out. And if it's, I don't know, if you're not MAGA and you didn't just create your account last week, I'm happy to add you on Twitter. That's my account. Glenn, options are hard here. I actually put on some options in SHLX, and I think I probably messed up, but we'll see what happens. I own July 14 SHLX calls, and I shorted Jan 24 15 calls against it. So it's an 18-month diagonal vertical calendar spread, and I paid like 15 cents for it. Now, the problem is, if we don't get a cash deal, if we get a stock deal, I'm totally screwed because that'll convert to Shell, and I'll be short 18-month out calls on Shell, and I'm going to get destroyed. It's very likely we get a cash deal, so that's not an issue. The next problem I have is that if SHLX is around this price, it's not a big deal, but if it gets much higher, do I exercise my $14 July calls when the next dividend comes in 3 weeks? My answer is probably no, but that's a huge pain in the ass. So it's always hard to own call spreads or calls on anything that is has a dividend and a big dividend. So for here, I think I would just stick with common. But I can understand why you would do that. All right. Over and out, my friends. MOS is dying. The Vox are adding. No, I just have like 30 basis points in call spreads and MSOS, and I don't understand anything about the pot stocks. It sure seems like a great deep value to me, but as of now, I am not doing anything on MSOS. I guess if I would do anything, I would just own the ETF. And maybe at some point I might get into that. But for now, no. It's not special situation enough for me. I mean, yeah, Congress could act, but it doesn't seem like that's going to happen. Twitter, if anyone's curious about my opinion on Twitter, I'm not involved. I was once involved on Twitter for about 2 years, and I haven't owned it for about the last 6 months. Anybody that wanted to acquire Twitter could have acquired Twitter over the last 5 years. It was always for sale. If Elliott and Silver Lake wanted to pay $60 or $70 a share, they could have bought it for $60 or $70 a share. They obviously didn't or couldn't stomach that size of a acquisition. Elon Musk is just a kid having fun. You know, I think he wants to win. I think it's a video game for him. I think he will try to do whatever it takes to win. Him selling his stock out in the open market doesn't seem like a win, makes him feel like a loser. So I think he'll do whatever it takes to try to win here. I think he thought that he would put it in play by bidding 54.20. He knew he would not be able to buy it at 54.20. So this way was him to try to put it in play. If it gets sold for 55 or 60, he makes a bunch of money and he looks like a genius. And somebody else owns it, and maybe they have different free speech rules that he wants. It seems hard to imagine that Silver Lake and Elliott want to partner with Elon Musk, give Elon Musk control, and, you know, go by his rules. You know, the only way you're going to make money on Twitter and as a private company would be firing half the employees because they don't do anything. And you're going to have the same problems as a private company as have a public company. They can't grow users and they can't monetize the users. And it's totally toxic. So no strategic wants this. The strategics that would want it can't buy it from antitrust reasons. And then the other strategics, look what happened when CRM just hinted at looking at buying Twitter. The stock got decimated a couple years ago. And it wasn't even as nearly as toxic then as it is now. So, no. I don't think Twitter will ultimately get sold. But I think you could probably sell puts on it. I discussed all this, Perry, about MX, so you'll have to go back and watch. I think that they could be hurt both on the supply side and on the demand side in China, but they have 50% more demand, Perry, than they can supply. So if China's economy goes down or contracts, they have so much more supply than they can supply, than the demand than they can supply. It won't have any effect on them in the intermediate term. But I did comment on what I think about the COVID situation is, and you can go back and you can go watch. About half of MX's sales is to the greater China area, but that's not necessarily the end product. That's their chips. The shit's, you know, assembled in China, and then the cell phones or whatever gets shipped all over the world. So it's not so much the Chinese economy that MX is dependent on. It's that their chips are being assembled there. Is it good? No, I would rather have business booming, and, you know, and the consumer booming. But no, I don't look at it as a big medium-term risk. I'm more worried about COVID shutting down the factories and maybe hicking up the sales process. All right, team. Love doing these. Thanks for coming here. Thanks for being part of the camaraderie. All I was saying was it hasn't been a really bad. I mean, BMYRT was a huge miss. Yet it's trading at $1.50 right now in the gray market. So you didn't even really lose a lot of money there, in theory. Groupon was a huge win, then a big miss. And MX has been a huge miss. Though, again, with MX, I've owned this from before 15, before the process ever happened. So my biggest positions, my 3 biggest positions on here have been rather disappointing. But then if you look at the other 15 or so that I've talked about, almost all of them have worked. All the special situations have worked. And some of them have been very controversial. I mean, CTIC, CCXI, and AXSM are 3 of the most controversial PDUFA names that have existed in biotech in the last few years. And 2 of them have been approved, and I think AXSM is right behind it. And all the wise guys said all 3 of those would be CRL'd. They told me. People that all they do is biotech. So I'm feeling pretty good with my track record. I'm hanging in there. Like I said, I'm only down a couple percent for the year. Last year, I was up 70 or 80% or something, even with Groupon closing where it did and with MX closing where it did. So I just need a couple things to go right, which is basically MX to be sold and maybe 1 or 2 good special sits for the second half of this year. And, you know, it'll work. Perry, your second account's already on my Twitter, but I'll try to find you again. What's your main Twitter name? I tried to do this last time and I couldn't find it. Is it Perry H. Rod? Okay, I'll look for that too. And remember, nothing's investment advice. I felt bad not coming back here and talking about AXSM after I cut it, because you might assume like I'm going to come back here and update every position if something that changes. But no, of course I'm not going to do that. It didn't matter because the stock's higher now today. So good. You know, I'm happy that worked out like that. You should expect me to come back if I like sell out a position like completely, or I really have a real change in something. I will try to do that. I make no guarantees, but I'll try to do that. As far as I know, I'm the only person, only professional investor in the world that does these YouTubes for free, giving you my real-time portfolio and trades. It doesn't necessarily mean you'll make any money off of it, but just like on Twitter, I think it's a pretty unique thing. Most people don't do this. So I enjoy doing it. And hopefully, you know, we could be profitable together. You guys can keep giving me the pushback on things, because I do like the pushback when it's, you know, done in an intellectually honest and respectful way. All right. Peace. Peace, everybody. Take care.